Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Stocks sliding and gold at a record as fear ramps up ahead of President Trump's reciprocal tariffs next week. The trade war also stoking inflation fears as we await the Fed's preferred price gauge. Lebanon picks former HSBC Managing Director Karim Souaid as its new central bank governor to lead a policy overhaul and kickstart an economic recovery. Plus, a Bloomberg scoop. A draft document reveals the U.S. seeking to control investment deals in Ukraine, squeezing out European allies. Well, it has just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Hong Kong today for the last day this week, where it is 12 noon. Thank you for joining us once again for the show. Let's get you up to speed on how some of these markets are faring, because we saw another down day for Wall Street yesterday and for European markets on concerns about this reciprocal tariff day. We're getting closer and closer to what Trump calls Liberation Day. Yesterday, of course, the big announcement coming on the auto industry, with some of those key auto stocks sliding anything between 5 and 10%. Even U.S. names as well yesterday. GM and Ford also taking a bit of a beating into the trading day. And so the close for Wall Street slightly negative, even more so for Europe. And you can see the picture today for futures leaning slightly towards the green, up 8 basis points. Bear in mind later today, a big data point coming up in the U.S. We've got the PCE gauge to watch out for, something that the Fed watches very closely. And more recently, we also had some of the upside surprises come through on the economy. So how the Fed pieces that all together will be an interesting one to watch. Euro stocks futures we spoke about leaning towards red as well, down 0.2%. Brent trading up towards $74 now. So this is actually its third week in a row that oil is witnessing gains. So you can also point that back to perhaps some of the upside surprises that came through on China, but then also rising geopolitical risk. Once again, this morning we're focused on Houthi strikes that have been going on in the Middle East region. So that's keeping perhaps the energy complex a bit supported. And then gold, take a look at where the gold complex is. $3,074, just shy of 75. It is yet another all-time record high for the bullion. We are up 16% year to date. No signs of the rush into gold, or the gold rush, I should say, abating at this point. So another record high for gold. But let's flip over, because there's something I do want to point out to you in the context of how the Fed may be analyzing all of the data that's coming through. Take a look at this analysis put together by Daniel Curtis on our markets team. And he's saying that actually, if you look at that yellow line, it tells you that the number of participants who are reporting upside risks to core PCE massively outnumbers those who are concerned about upside risk to the unemployment rate, which tells you that even though the Fed have two parts of their mandate, unemployment and inflation, they are more concerned about upside risks to inflation. Hence why today's number, that PCE print, is going to be key for perhaps what the Fed decides to do from here. Okay, with that in mind, let's go back to markets and check in on how markets in Asia are faring with Avril Hong. Avril, I was just talking through about upside inflation prints, and of course we did get one out of Japan today.
Yeah, we saw that surprise higher on Tokyo CPI, but I thought too what we're seeing in the rest of Asia markets. I mean, it's really how they're still unable to shake off the tariff concerns as the clock ticks down to April 2nd. And this is the look of caution into the weekend, with Japan, South Korea underperforming on the Nikkei. This is the biggest loss so far this month, and to the lowest level in about 2 weeks. And probably not helping is what we heard from the Prime Minister, talking about this likely very big impact from auto tariffs. And the other market that we've been paying attention to as well is Chinese stocks, because they have been relative outperformers for much of this week, but the earlier gains have been erased. Earlier gains from this morning, we're seeing the Hang Seng slip into negative towards the lunch break, and a lot of this not just from financial property related stocks as optimism fades. We're also seeing the Hang Seng Tech. Now, if it closes at these levels, it would meet the technical definition of a correction, 10% down from the March peak. A lot of this has got to do with the declines in EV makers such as NIO. This is, of course, because of its share placement. So maybe short-term negative. There have been analysts that say maybe we see Chinese stocks manage to look past this into the long-term positives for EV stocks overall.
Yeah, Avril, thank you so much for the overview. Well, Prime Minister Mark Carney says Canada will fight back against President Trump's trade war, but declined to outline specific actions. Carney says his government will respond based on what the U.S. does next Wednesday, when Trump plans to announce so-called reciprocal tariffs. Canada has already imposed retaliatory levies on over $40 billion worth of U.S. products.
We will fight the U.S. tariffs with retaliatory trade actions of our own that will have maximum impact in the United States and minimum impacts here in Canada. We will protect our workers and our industries during this difficult period.
Well, joining us now is Pierre Chartres, Fixed Income Investment Director at M&G Investments. Good morning to you, Pierre. We are getting closer and closer to that reciprocal tariff day, or Liberation Day, as President Trump likes to call it, and also beginning to see a real-world impact of the imposition of these tariffs and what it could mean for some companies. Ferrari yesterday, for example, saying that they're going to raise the prices of their cars, ultimately to their consumers. Have we reached the point now where it is fair to say that all of these tariff measures will actually be inflationary because you've got companies coming out telling you that they're going to raise prices?
Yeah, I mean, I would say so, at least in the near term, everything else equal. Tariffs are indeed inflationary, and if you look at kind of the Fed's latest press conference, increasing its inflation expectations and reducing their growth forecast, I think that's been the theme really over the past few weeks. So obviously they are attacks on consumers. Tariffs, how it gets disseminated in the economy, the price elasticity of goods does matter, but everything else equal in the short term, they will be inflationary. Now we have to watch out as well for the second order effects and the impact on wages and on inflation expectations.
Yeah. Let me ask you about the upcoming inflation print today. I don't know if you heard the top of the show, but I thought it was interesting to note that most FOMC participants seem more concerned about upside risk to inflation than perhaps the weaker economy or upside risk to the unemployment part of the mandate. Do you think the market is primed for potentially a hot print today out of that PCE number, given how far fixed income has traveled the last few months?
It is a concern for markets, this idea that obviously inflation had been trending downward over the last 3-4 years, ever since the spike in 2022, and we could get a resurgence of that. Now, I think the latest US CPI print was encouraging. Now, the PPI, which feeds into the today's number, seemed to suggest that it might be a little bit hot. So we'll have to see, and I think that's what markets are worried about. But broadly speaking, I think the impact on growth, the impact on corporate profits as well over the short to medium term is not negligible, and these two factors are kind of offsetting each other at the moment, and that's the uncertainty that markets, that investors, that central banks have to deal with.
Yeah. How are you thinking about the steepness of the curve? We've seen a re-steepening once again, 530 steepening, 210 steepening. Do you expect that trend to continue?
So we have gone from an inverted curve to a steeper curve, I think, through various degrees. If you look at probably what's been happening in Europe, in the UK and Germany, curves have probably steepened more than in other parts of the world, as the situation around spending, for example, in Germany, or just the deficit in the UK has created some anxiety. In our view, the advantage of going a little bit further out into the curve today does give you an insurance policy. As we said, if we get an escalation of tariffs next week, if tariffs are higher than what markets are currently expecting, we still see government bonds, with the potential to rally as a safe haven asset. So that insurance policy from longer dated bonds is still in place, and in our view, it's worth owning for that reason.
Yeah, I guess one potential risk to that thesis is later on in the year, and I know the market is very focused now on tariffs, but later on in the year, the Trump administration may decide to extend the tax cuts that were put in place by the former Trump administration. Let me just ask you whether, if they do go for that extension and do it in an unfunded manner, whether you could see a potential huge upside for yields at that point, because the market will get spooked out about the fiscal trajectory of the U.S.
I do think that's definitely a risk, and you've seen it all over the world, and the UK is currently battling that at the moment. In our view, and the Trump administration has repeated this quite often, the tariffs that they're implementing today are here in part to pay for the future tax cuts. So I think the Trump administration is aware of that. The drives towards more government efficiency and cutting costs there, in our view, show us that they are cognizant of this risk. But this era of just spending for governments and fiscal loosening is definitely over, given the high level of debt and the high interest expense for governments all over the world.
Yeah, so interesting. So, I mean, that's, I think, going to be another major catalyst for markets later on in this year. Of course, now everybody's focused on that tariff day that's coming up. Pierre Chartres, Fixed Income Investment Director at M&G Investments. Thank you so much for joining us. Now, Elon Musk says he plans to slash $1 trillion in government spending by the end of May. The billionaire running President Trump's so-called Department of Government Efficiency told Fox News he's confident these savings won't affect critical government services. The Doge website so far lists about $22 billion in contract savings, while claiming $130 billion in unspecified cost reductions.
They may characterize it as shooting from the hip, but it is anything but that. Which is not to say that we don't make mistakes. If we were to approach this with the standard of making no mistakes at all, that would be like saying someone in baseball's got to bat 1,000. That's impossible. So when we do make mistakes, we correct them quickly, and we move on.
President Trump says he's withdrawing his nomination of Republican Congresswoman Elise Stefanik as U.S. Ambassador to the United Nations. The move will preserve a consistently loyal Trump vote in the House of Representatives, where Republicans hold only a slim majority. The decision highlights the difficulties Republicans face this year in passing their agenda on taxes, energy, and immigration. U.S. Secretary of State Marco Rubio says the Trump administration has so far revoked over 300 visas as it pushes to expel foreign citizens who protested against Israel. Amongst them are several international students who express support for Palestine. Their lawyers say the actions violate constitutional rights to free speech and due process.
Maybe more. It might be more than 300 at this point. We do it every day. Every time I find one of these lunatics, I take away their visa.
You're saying it could be more than 300
sure,
visas?
I hope. At some point, I hope we run out because we've gotten rid of all of them. But we're looking every day.
And coming up, Lebanon picks its new central bank governor. More details on Karim Souaid's appointment next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Hong Kong. Lebanon has named Karim Souaid as its new central bank governor. Souaid is the founder of Dubai-based private equity firm Growthgate Partners and previously worked at HSBC. But Lebanon's Prime Minister Nawaf Salam says he had reservations about the appointment. Paul Wallace leads Bloomberg's MENA economy and government coverage and joins us now. Our colleague Omar Tamo put a tweet up yesterday saying that the reaction in Lebanese Eurobonds was quite negative when this announcement came out. And that tells you that perhaps not all of those who are looking for a proper overhaul of the banking sector are pleased with this appointment, Paul.
Hi, Jumana. That's certainly the case. He does seem to be a bit of a divisive candidate in getting this role. And the Eurobonds, Lebanese Eurobonds, which are deep into the distressed territory, they're in default. They've fallen from about 21 cents to about 18 cents in the last week or so, as it became a bit clear that Karim Souaid would get this role. He has a huge task in overhauling the Lebanese financial sector, trying to get it back on its feet somehow, and also negotiating with the IMF to try and get them to effectively give bailout money to the Lebanese state, which is in dire need of it after years of crisis and obviously war with between Hezbollah and Israel.
Yeah, and $70 billion worth of losses estimated to be in the financial system. He's got his work cut out for him. We will discuss that later on the show as well. But Paul, while you're with us, I also want to ask you about the series of Houthi attacks that seem to still be happening. I know earlier in the week, all of the public attention was on the signal leak, but actually, despite the U.S. doing their best to deter Houthis, they're still attempting missile strikes on an almost regular basis at both Israeli assets and at ships in the Red Sea.
They are. So far, I think we're almost 2 weeks into these renewed U.S. strikes, and the Houthis are very much still able to attack Israel. They haven't caused much damage there, and no casualties, let alone fatalities in Israel in the last 2 weeks. But they are firing missiles pretty regularly, and at least Western ships are certainly not looking at the southern Red Sea as if it's open once again. In fact, I don't think they'll look at the southern Red Sea as somewhere that's safe to go for many more months, if they do so at all this year. So for now, the Houthis are still standing. U.S. officials say these attacks are working, that the Iran-backed group is being weakened, and that they've lost a lot of leaders as well as much of their missile stocks in the last 2 weeks. But as you said, for now, the Houthis are undeterred, and they look like they're far from being defeated.
Bloomberg's Paul Wallace, thank you so much for the reporting there. Now, Bloomberg has learned that the U.S. is pushing to control all major future infrastructure and mineral investments in Ukraine. A draft document grants the U.S. first claim on profits transferred into a special reconstruction investment fund and requires Kyiv to pay for all U.S. military and economic support since the start of the war. The deal could give the U.S. effective control over large areas of Ukraine's economy. Israel's parliament has passed a law increasing the role played by politicians in selecting judges, including on the Supreme Court. The law reduces the influence of high court judges and legal leaders on the selection committee, shifting the balance to lawmakers and lawyers selected by political leaders. Opposition leaders have pledged to repeal the law and boycotted the vote, instead joining protesters outside the Knesset. And coming up, the Hong Kong Rugby Sevens returns, putting the city's brand new $4 billion stadium to the test. We'll take you live there next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersace in Hong Kong. Well, Hong Kong's shiny new $4 billion stadium complex is being put to its first big sporting test this weekend. Rugby fans from across the world will flock to the 50,000-seat venue as the Sevens tournament moves to its new home. It's one of the many ways the financial hub is trying to boost international tourism and revive its economy. Our China correspondent, Minmin Lo, is at the new Kai Tak Stadium. Minmin, well, lucky you, first of all. You get a glimpse of this new stadium and everything that's going on there. I've got to admit, I don't know a lot about rugby, but everyone tells me that the Rugby 7 weekend is a great weekend in Hong Kong. What's the mood like?
Yeah, I'm not going to lie, I don't know very much about rugby as well, but this is more of a party with a little bit of sports rather than the other way around. because it is possibly one of the most raucous parties that Hong Kong will host this year. You can see behind me there's a match going on. It started at 10:30 a.m. this morning. It's not as electrifying as you might think, but that's partly because it's Friday, and so the stadium is still half empty. But this weekend, though, you would see not just the sports fans that are piling in, but also the finance professionals piling into those VIP booths after the back-to-back investment conferences this week. This event was specifically timed to cap it all off. It's part of the government's bid to bring back tourists to the city after we saw that exodus of expats after the pandemic. Have a listen.
Pre-pandemic, we probably looked around 50% of our visitors were overseas. We dropped, obviously, during the pandemic. Post-pandemic, we got back to around 30%. But one of the other upsides of during and post-pandemic was we attracted a lot more local visitors. So now, coming into Kai Tak, we're in a really great place where if we supplement the increase in overseas visitors, but also build on the local visitors that we had, local fans that we had during that time, we're going to be a really, really healthy place.
Of course, taxpayers want to know whether that $4 billion investment from the Hong Kong government is worth every penny. But this is meant to turn Hong Kong into an international destination for mega events after Hong Kong lost out to arch rival Singapore in hosting the likes of Taylor Swift and Lady Gaga. Of course, the next big event is the Coldplay concert that will take place here as well. So that turf behind me is going to be rolled out, put in a refrigerated truck, sent across the border to Zhuhai in China to be stored.
Min, you mentioned that this is a new stadium, so maybe just tell us a little bit about the new features of the stadium. What makes it different? What makes it different from the prior stadium? Can you give us maybe a bit of a tour, perhaps?
Yeah, I think designers actually want to replicate a little bit of that old flavor. Of course, the South Stand was where the party used to be, the heart of the party, where people outcompete each other with their costumes. And here at the South Stand, the designers replicated it down to the concrete entranceways and the number of seats, hoping to preserve that spirit. Of course, there is the retractable roof here that takes half an hour to open and close. That's what makes it a multi-purpose venue. And as the chief executive of Hong Kong, John Lee, said at the opening ceremony, he said, like that retractable roof, the sky is the limit for the Kai Tak Stadium.
Fantastic stuff. China correspondent Min Lo. I've got to say, I'm a teeny bit envious of you being there. Maybe we can swap positions. You can do the second half of Horizons and I can go to the rugby. Thank you for the reporting. Okay, let's take a look at how markets are faring on this final trading day of the week. I was a bit surprised this morning when I was taking a look back at equities. We're actually trading positive for the week despite all the tariff noise. Yesterday was not a pretty day for some of these global indices, with the S&P ending in the red, down 0.3. The Nasdaq also ending down 0.5% on concerns about the tariffs and what it may do to certain industries. A lot of the auto names, even American automakers, were down yesterday on the Trump administration's announcement that they're putting on 25% on imported cars. So that's a big theme playing out in markets. We'll talk more about markets and other financial assets in a moment. But coming up, suspected U.S. attacks hit Houthi targets in Yemen, while Gazans protest against Hamas rule. We'll discuss geopolitics next. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Stocks sliding and gold at a record as fears ramp up ahead of President Trump's reciprocal tariffs next week. The trade war also stoking inflation fears as we await the Fed's preferred price gauge. Lebanon picks former HSBC Managing Director Karim Souaid as its new central bank governor to lead a policy overhaul and kickstart an economic recovery. Plus, a Bloomberg scoop. A draft document reveals the U.S. seeking to control investment deals in Ukraine, squeezing out European allies. Well, it's just gone 8:30 a.m. across the Emirates. I'm Johanna Versace in Hong Kong, where it's 12:30 p.m. It's with the final trading day of the week. And what a week it has been in terms of market data and also tariffs, all the news swirling around tariffs. Yesterday, the latest being the announcement that the Trump administration is going to impose tariffs on auto imports. So we saw a lot of declines in the auto space, both for European automakers, Japanese automakers, and even U.S. automakers as well. They're supposed to be the beneficiary of all of these tariffs. And yet you see the likes of Ford, GM also posting declines yesterday. So S&P futures this morning rebounding somewhat, but marginally, leaning towards the green, up 5 basis points. One stat that I was looking at today is the fact that the S&P is actually on track for its worst quarter in 2 years since 2023. So it hasn't been a good start to the year for U.S. equities. European futures also leaning towards the red, down 0.2%. This after declines yesterday, with Trump warning that he may go even further against U.S. and Canada if they try to team up or if they go heavier on reciprocal tariffs. So again, right in the firing line there. Brent also in focus. We were just at $74. We've come off that level now, but it's the third week in a row that we're seeing oil gain, so weekly gains for the energy complex. And again, there you can talk about perhaps some of the fundamentals that are coming through, but also geopolitics in mind as well. And then gold, everyone's favorite, keeps on rallying. We are at another record high this morning, all-time record high, up 0.5%. Flip over, and let me just show you also some of the price action that's accompanying it, the buying action. ETF investors can't get enough of it. They keep buying. These are inflows into gold. And take a look at the last 2 months, February and March, massive uptick of ETF investors going into that safe haven, perhaps on perhaps some of the inflation concerns, on geopolitics, on safe haven, on uncertainty, geopolitics, you name it. But whatever you want to call it, gold is on track for its best quarter since, listen to this, 1986. So there you have it. Really strong start to the year for gold. Okay, let's also check in on how markets in Asia are faring with Avril Hong, who is in Hong Kong with me still. Avril.
We are in the same space. This is the last day, Joanna. This is the look of caution in Japan stocks. I mean, it's really about those auto levies, right? It's such a key part, the auto industry, for the Japanese economy. Until we see that potentially risk easing off, this is what we're seeing. Nikkei, biggest declines in at least a month, I believe. And the big drag are these transport-related stocks. This gauge losing by the most in about 2 months. Now, it's not just these auto-related stocks, it's also the chip makers or the chip-related stocks. And I think one analyst at Sumitomo Mitsui put it best, given the declines in the NASDAQ and the Philadelphia Semiconductor Index, it's really hard at this point to buy even these Japanese chip names. Now, we also had data out of Japan, and that's on the Tokyo CPI. It was higher than expected on all fronts, right? Whether you're looking at the headline number, excluding fresh food or excluding fresh food and energy. So pointing to a higher cost of living, because of course this Tokyo number is a leading indicator of nationwide trends. So solidifying the path of the BOJ towards those rate hikes. But if you look at the way dollar yen is faring today, you wouldn't think that's the case. It's really those considerations still about levies. Dollar yen not far from 151. Joanna.
Avril, thank you so much. Well, I'm keeping a close eye on some of the remarks coming through from President Xi, actually, from China, because there's quite a interesting meeting going on. President Xi is meeting with key international business executives, CEOs from around the world. This includes the CEO of FedEx, Standard Chartered, Sanofi, AstraZeneca, Aramco, one of the voices from the Middle East region, also there. So significant discussions taking place. Also rare to get a video of President Xi speaking, but here is what he's saying. China will take steps to solve issues foreign investors face. China will remain foreign investors' favorite destination. Some countries have politicized trade matters. Any guess who he's referencing there? Some countries have made decisions against economic rules. Xi says China-U.S. ties should remain stable and healthy. So here directly addressing the United States and saying that the ties should remain stable and healthy between the two of them. So quite significant to get these comments from President Xi, clearly addressing the business community here, and not just the Chinese business community. He's addressing the international community with all of these very senior voices from companies in the US and in Europe and in the Middle East. Aramco, I just spoke about, in China, having this conversation with the president there, and he's reassuring them that China is open for business. They will take steps to solve issues foreign investors face. So significant there from the Chinese president. Now back to geopolitics. Suspected U.S. airstrikes on Friday have hit sites across Yemen controlled by the Houthi rebels, including neighborhoods in the capital, Sana'a. The Associated Press says these strikes appeared more intense than earlier in the campaign that began on March 15th. Joining us now is Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Good morning to you, Dalia. Let's just pick up with Houthis. They all of a sudden have become of worldwide interest because of this signal group chat saga that went on earlier in the week. But despite all of the, let's say, political ramifications of what's going on in internal politics in the U.S., Houthis have continued with their attempted attacks on assets on the Red Sea and in Israel as well. They don't seem to be deterred by the language or the actions by the United States.
Actually, you're absolutely right, Jemana. They're emboldened by it. One of the biggest revelations of, what we're calling signal gate here is the intention of the United States believing that the Houthis can be defeated simply by airstrikes. Now, remember, it was the National Security Advisor Michael Waltz who said that U.S. airstrikes, in the chat, he said, are meant to deter them and to return commercial ships to the Red Sea and to reopen the lanes to the Suez Canal. Now, the Houthis will not be easily beaten. And what we know from U.S. military strategy is that few wars have ever been won with air power alone. Even during the U.S. war with Iraq, for example, at the height of success in Kuwait in 1991, even when air power was at its apex, you actually needed a land invasion. And this might be the critical revelation of the chat the Houthis are actually taking advantage of, is that they know that U.S. leadership under Trump will not allow for a ground invasion, and rather will just remain with these airstrikes. Now, what we do know is that the biggest companies, on the economic level at least, don't have any appetite to return to the Red Sea right now. They found a workaround, and while it's very expensive, it's been working, and those alternate lanes have actually let them deliver their goods on time. And so sadly, this idea that U.S. airstrikes are going to defeat the Houthis is actually what the Houthis wanted, because ultimately what they want is to drag the U.S. into a longer campaign. Now, if you remember, when President Obama entered the war with Saudi Arabia and Yemen in 2015, it wasn't until all the way President Biden in 2021 was able to withdraw U.S. air support for the Saudis. And it was seen as the way with which there was a protracted conflict the U.S. was engaging in. And so now with this just airstrikes, it could be that the Houthis are getting what they want.
Yeah, well, they're certainly probably enjoying the international attention that they're getting right now, but they've always sort of tried to make the linkage between their actions and the situation in Gaza. They've said that they've been launching these missiles in solidarity with the Palestinian cause. So maybe let's just shift to what is going on there. The fact that the ceasefire has collapsed. There doesn't seem to be any progress vis-a-vis transitioning from phase 1 to phase 2. Israel are insisting that Hamas release the rest of the hostages. What will unlock this stalemate now?
It doesn't look like much is going to unlock the stalemate, unfortunately. We know that the stages, stage 2 and definitely stage 3, is off the table today, that the air campaign and the assault on Gaza is much worse than it has been in months. And what we see is hundreds of people dying a day. And so we don't have the agreements from the United States, from Israel, or from the Arab leaders. Egypt and Qatar being part of the talks is seeming increasingly dim. So it doesn't seem like we have a clear path. But we do have some interesting developments in Gaza, and that's that Palestinians are coming to the streets and protesting. We saw some really interesting developments today and yesterday where Palestinians in Gaza are actually protesting Hamas. And so while people...
Dalia, can I ask you about that? Because we touched on it yesterday on the program, and it really felt like quite a significant event. To your mind, have you seen protests like this before? And could it actually have any impact on what happens next with Hamas? Could it exert pressure on them to finally release the hostages in exchange for a full-blown ceasefire?
So I do believe there was an agreement on release of hostages, but I want to talk about something critical, about this so-called surprise that Palestinians are protesting. So the day before the horrific attack on October 7th, the Arab Barometer Project, which is the leading polling operation in the Arab world, for example, there's a Eurobarometer and an Afrobarometer. So the Arab Barometer finished up its polling in Gaza on October 6th. On October 6th. And what this poll revealed was that 67% of Gazans were unhappy with Hamas and wanted them out of power. And when they were asked, who would you vote for, less than 20% said that they would vote for a member of Hamas, and that they also said they would not vote for a member of Fatah, which is the leadership in the West Bank. And so we saw from this polling data, again, October 6th, it was completed, was that Palestinians were increasingly unhappy with the rule in Gaza. They haven't had an election in 20 years. And so it begs the question of, had the Palestinians been allowed to actually have an election to remove Hamas from power, why is it that this assault on Gaza has continued in the name of the eradication of Hamas, when all of the data has told us in the past couple of years that Palestinians were increasingly upset with their rule? And so it begs the question of, what is the greater objective happening in this region? And so while folks are really surprised about the protesting of Hamas rule yesterday and today, it's not surprising to the rest of us who have been looking at this data and saying, give the Palestinians a chance to govern themselves, and you will see what people actually want. They were accusing Hamas of being corrupt, and Hamas won in 2005 and 2006 on running on an anti-corruption platform. And so again, it continues to beg the question of, what is the intention of Israel in the region when much of the Palestinian population actually wanted a different kind of rule and self-governance for themselves.
Yeah, and also you could also say that Arab states are also of the same position as well. They've also said that they would like to see a different form of administration in that ultimate reconstruction phase of Gaza. Dalia, always good to have your perspectives. Thank you so much for coming on our show today. Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Now, Turkey has deported a BBC journalist as part of a widening crackdown by authorities on media and protesters following the imprisonment of Istanbul's mayor. The BBC says reporter Mark Lowen was detained at his Istanbul hotel on Wednesday before being put on a flight to London. Turkish authorities have arrested nearly 1,900 people since protests began. Australian Prime Minister Anthony Albanese has called an election for May the 3rd, kicking off a campaign expected to focus on cost of living pressures and a housing crisis in a sluggish economy. Albanese is campaigning to become the first Australian leader in more than 2 decades to win consecutive elections. His opponent, Liberal leader Peter Dutton, is trying to tap into global backlash against incumbents that saw governments fall across the world in 2024. And coming up, a turning point in Sudan. The army retakes the capital city. We discuss what this means for the civil war next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Hong Kong. Let's turn to Sudan, where the army has recaptured the national capital of Khartoum from the Rapid Support Forces militia in a major blow for the RSF. It marks a turning point in the 2-year civil war that's drawn in outside powers and torn apart the resource-rich North African country. Now, monitoring these developments, Secretary of State Marco Rubio has said the U.S. is engaged with partners in East Africa.
We're engaged. I've had conversations with a number of countries over Ethiopia, with Kenya, just over the last 72 hours, so we've been raising that. And we're very concerned that we're going to backslide to where we were a decade or less ago.
For more, Bloomberg's Ndira Ganga joins us now from Kigali, Rwanda. Interesting to hear that Sudan is now on the U.S. Secretary of State Marco Rubio's radar. What more did he have to say about the situation and the ongoing civil war in Sudan?
Hi, Jumana. So the goal here is to try and de-escalate the tension that is rising in Sudan. The fighting has been going on for 2 years. A humanitarian crisis is already ongoing, and there's so many humanitarian crises going on in other parts of the world. So there is need to try and solve some of these conflicts before the situation becomes way dire, and it will need more resources and more effort to try and solve the conflict. And this is not the first time we're seeing the U.S. trying to intervene in the conflict in Sudan. We saw the previous administration under Joe Biden through Anthony Blinken try to broker a peace deal between the two warring sides in Sudan. Later on, he expressed disappointment that the talks had fallen out due to the fact that both sides were committing atrocities and they wanted to win the war at any cost. And also, there's something to be said about the situation in South Sudan. There's also a crisis there. So the U.S. does not necessarily want to have a twin crisis. And also, East Africa is not at a very stable place. You look at Kenya. They're just off very deadly protests. 60 were dead during the finance bill protest. They have their debt situation going on. And also, an election is coming up in 2027, and it could be a very tense election. Ethiopia is also struggling with its own internal issues. There's risk of conflict in Tigray and also Eritrea. And Al-Shabaab presence is growing in Somalia. So that is why we are seeing the U.S. beginning to pay attention to the region, not just to Sudan, but East Africa in entirety.
Yeah, and Ndira, let's just turn back to the most recent developments and the fact that the army is now saying that they've successfully recaptured central Khartoum, including the international airport. How significant is this moment in terms of where we are in the civil war that's been going on for 2 years now?
Jumana, it's a significant moment because the army is saying that they want to retake the whole country and liberate areas that RSF is currently controlling. And so while there was conversations and fears that the country could be split into two Libya style, the army is saying that that's not going to happen. They want to take over the whole country. RSF has said that they're retreating, they're repositioning themselves, and they will be following a new strategic plan. So this just goes to show that the war is far from over. But there's also a very interesting development where we are seeing the external partners of Sudan who could have a really great, rather of the army, who could have a really great knockoff effect of them taking over Khartoum. You know, Sudan is a country that has a lot of potential when it comes to agriculture, gold, and also their energy riches. And you have countries like China, Turkey, Iran, Qatar, who have been backing the army, and they're hoping that they can leverage these relations. The biggest loser here could be UAE, who have previously backed RSF allegations that they continue to deny.
Yeah, as we've spoken about in the past, Bloomberg's Ndira Ganga in Kigali, Rwanda. Thank you so much for the reporting. Now, coming up, stagflation is the big risk. That is according to UBS's Iqbal Khan. We hear more from that interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Hong Kong. UBS Asia Pacific President Iqbal Khan sees stagflation as the biggest risk for investors. He spoke with Haslinda Amin exclusively at the Bloomberg Family Office Summit in Hong Kong about why he's not expecting a recession in the U.S. despite rising trade risks.
The biggest risk for everybody is to sort of like have this perspective of hope, right? I think everybody needs to focus on the fundamentals. Even if you look at the U.S. economy, you mentioned there is a slowdown in growth. In a number of the fundamentals, you're not seeing that to the extent that you might read in the media. If you look at some of the portfolio companies,
it was the OECD that cut its growth projection. It wasn't the media.
Global growth projection. I'm not arguing with you around is global growth higher or lower. Also, the reduction was not that significant. The biggest question, if you think about risk, I don't think it's a risk question of how much growth we will have or not. It's stagflation. That's the real risk out there. And that's what everybody wants to avoid. And I think most of the central banks including the Fed, is clearly very, very focused on that.
Do you see a recession in the U.S., given multiple tariffs that we're looking at, given the expectations of a trade war? Prior to the 25% tariffs on autos, there was a chance of, I think, 35 to 40% of a recession in the U.S. Summer says 50. How are you looking at the possibility of that happening?
Look, I think we're not seeing that as of right now. Have risks gone up in terms of having a slower economy? Yes. Equally, if we look at this whole, and everybody keeps on coming back to the tariffs, right? I mean, most of these tariffs have actually been short-lived, with the exception of specific tariffs and the reciprocal tariff that's been announced. And let's see how long some of these more significant tariffs are going to actually prevail and exist. If you look at what happened earlier on this year around specific high-level tariffs, you saw them being taken away post-negotiations and conversations. At the end of the day, the question will be, how do tariffs really impact the economy, and what level of tariffs impact the economy? If the objective globally, and I'm not specifying onto the U.S. administration, but globally is to actually have a world where you are at the same level playing field and the product makes the difference. If that is, and assuming that is the objective, but if that is really the objective, then this will be a transition period. And this transition period brings uncertainty. That uncertainty has an impact on volatility in markets.
Fascinating insight there. That was a UBS Asia Pacific President Iqbal Khan speaking with Bloomberg Insight anchor Haslinda Amin. Okay, we're wrapping up quite a volatile week of trading for global equity markets. This is the picture for futures. Not doing a whole lot today, but European futures are the ones that are doing the worst, leaning towards the red. And of course, the focus in terms of data today is going to be that PCE print coming out of the U.S. The bigger one, though, is April 2nd, the tariff day, and what may or may not happen into and out of that day. There's still a couple of days to go. Coming up in the next hour of Horizons, author Ghattas joins us to discuss the developments in Lebanon, plus market insights with Azimut Group's Nicolo Bocchin, and we talk to the CEO of Ignite Energy Access, Yariv Cohen. I'm Jumana Bersachi in Hong Kong. Stay with us as Jennifer Zabazaja joins me from Johannesburg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Stocks sliding and gold at a record as fear ramps up ahead of President Trump's reciprocal tariffs next week. The trade war also stoking inflation fears as we await the Fed's preferred price gauge. Lebanon picks former HSBC Managing Director Karim Souaid as its new central bank governor to lead a policy overhaul and kickstart an economic recovery. Plus, a Bloomberg scoop. A draft document reveals the U.S. seeking to control investment deals in Ukraine, squeezing out European allies. Well, good morning again, everybody. It has just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Hong Kong, where it's 1 p.m. And it is a great day today, not just because it's Friday, but I believe it's a special day for you, Jen. Happy birthday.
Thanks, Jumana. Nice to be here. I am Jennifer Zabazaja in Johannesburg, where it's just gone past 7 a.m. Yes, and welcome to the second hour of Horizons Middle East and Africa. It's great to be here. And I know today is my birthday, but a lot of attention is being paid to April 2nd. And April, in general, just given a lot of the deadlines and the tariffs, the reciprocal tariff date that is on many investors' minds just getting into the new month.
No, Jen, we're not going to let reciprocal tariff day overshadow your birthday. Come on, that's not what investors are focused on today. But I'll tell you what they are focused on, though. Thank you. Coming up later today, we do have inflation numbers, key inflation numbers that the U.S., that the Fed will be watching closely. Those PCE inflation indicators will be significant because, and I'm going to show you a chart in just a moment, inflation in the U.S. has been quite sticky, and even more so now that there's a lot of uncertainty around the impact these tariffs tariffs may have. One of my favorite stories from yesterday was that the likes of Ferrari are going to be introducing price hikes to customers of around 10%. So we are beginning to see the real world impact of these tariffs and what they could mean for the end consumer. So that's just one company amongst many companies that are likely to pass on the cost. So that's why people are saying that this tariff impact could be bad for growth and a shock to inflation, hence stagflationary. So S&P futures today leaning towards the green, up 8 basis points. European futures building on from yesterday's losses, down about 0.2% as well. Here, bear in mind that the rhetoric also hasn't been that great. President Trump warning of further reciprocation if the EU and Canada start pairing up on tariffs. And so the war of words is something to watch out for there, too, as the situation heats up into April the 2nd. Brent in focus, namely because we're on its third week of gains, a third week in a row. So trading just shy of $74 here, slipping a little bit in trade, but still a positive week for the energy complex. And then gold once again, all-time record highs. Money keeps pouring into the bullion, just shy of $3,075 here, getting close to 3,100, up 0.5%, up 16% for the quarter, the best quarter for gold since 1986, so a really long time ago. All right, our terminal chart today, I hinted at it now, but I thought this was really interesting from our markets team. Dan Curtis sent this out, but it basically tells you that Fed participants, if you listen to what they've been saying recently, they've cited more concerns about the upside risk to inflation than the upside risk to unemployment. And remember, the Fed obviously have two parts of their mandate. One is keeping price stability, but the other is maintaining the unemployment rates at a level that is non-inflationary. But as of now, FOMC participants are more concerned about the inflationary outlook. So again, bear that in mind as we get into the PCE numbers later today. Okay, let's also check in on how markets in Asia are faring with Avril Hong in Hong Kong for, I guess, the last day that we're going to be together. Avril?
Yeah, it's such a sad note to part on, given how markets are shaping up this Friday, right? I mean, we're really seeing the region's benchmark headed for gains for the quarter, but meeting a bit of a stumbling block, given the April 2nd deadline. Whether you're talking about reciprocal or auto levies, right, that's still going to be the key overhang for markets. And into the weekend, this is the positioning. So Japan is the big drag on the MSCI Asia Pacific. It's at the lowest level, the Nikkei, in about 2 weeks. And I think it's seeing the biggest loss in about a month. It's the chips, it's the auto stocks that are the drag, and South Korea also underperforming. So it really reflects what investors' concerns are. We're also seeing, back from the lunch break in Hong Kong, and the key levels we've been watching on the Hang Seng Tech, just below the 5,500 handle. It is pairing some of the losses from the morning session, but keep in mind how we actually saw it at one point sort of meeting this definition of a technical correction. That drag was seen from some of the EV stocks. This looks like potentially maybe we see a bit of a turnaround, a bit of optimism or less pessimism, I think, creeping into the markets as we kick off the afternoon trading. Jumana.
Yeah. Avril, also interesting this week that for the first time in a long time, U.S. equities have actually outperformed Asian counterparts. So that is a big change versus the last couple of months. Well, Prime Minister Mark Carney says Canada will fight back against President Trump's trade war, but declined to outline specific actions. Carney says his government will respond based on what the U.S. does next Wednesday when Trump plans to announce so-called reciprocal tariffs. Canada has already imposed retaliatory levies on over $40 billion worth of U.S. products.
We will fight the U.S. tariffs with retaliatory trade actions of our own that will have maximum impact in the United States and minimum impacts here in Canada. We will protect our workers and our industries during this difficult period.
Joining us now is Nicolo Bocchin, Global Head of Fixed Income at Azimut Group. Nicolo, good to have you with us. So many people have been talking about the word stagflation here, that we are likely entering into an environment of much lower growth and at the same time accompanied by higher inflation levels than what investors have been penciling in. First of all, do you share that view? And what does a stagflationary environment mean for fixed income?
Hi, good morning, and thank you for having me here today. Well, we start hearing about stagflation, if I remember correctly, in 2021, where people were expecting lower growth and a stronger inflation. And it's still the case today that we keep hearing about it. Well, I don't share that view in full. Yes, with tariffs, we might have minor inflationary pressures, but I don't see anything different than in 2018 happening. So we are not new to tariff, right? They happened in 2018 first. And you barely had an increase of 0.3 in the inflation number in US, 0.5 maximum. So it is a blip, not something that will create inflationary pressures like the one we experienced in 2021 and 22, where we were facing an inflationary shock. Of course, stagflation would be damaging for markets, but I don't buy into it.
Okay, interesting. So 10-year yields then, trading at 4.35. Would you say that's around fair value, given your views?
It's interesting, it's attractive. We have to keep in mind that we have the prospect of banking deregulation in front of us. So it's, if that really happens, this is a big boom for treasuries and for the whole yield curve in US. Plus, last week we had another very important news, which is the QT from the Fed is going close to zero. And again, this is supportive for valuation on US treasuries.
Do you focus then, Nicolo, on U.S. Treasuries, or are you and the firm looking outside of the U.S. potentially at other opportunities, especially if we do? I know you say you didn't buy into the stagflation argument, but where else do you look?
Well, Europe is interesting. Credit is very interesting. Yes, spreads are tight. People can argue that spreads are at the tightest, but to me, the fact is that we are clipping very juicy yield compared to the past. And what you want in this environment is having cushion from a yield curve that can absorb volatility, either coming from the rates or coming from the spread. So credit, to me, is really the place to look at opportunities, and the subordinated debt space remain key as an alternative to pure high-yield debt.
Yeah. Do emerging markets potentially offer an opportunity when it comes to credit, but also when it comes to assets more broadly?
There can be pressure coming from tariffs. The biggest effect of tariff is a negative global growth, so EM could suffer a bit. But I like EM bonds a lot at this point in time. Frontier being a great place to be. Sukuk, Islamic finance bonds, again offering plenty of opportunities to capture yield, to capture spread, and enjoy the future.
Fascinating insights there. Nicolo Bocchin, Global Head of Fixed Income at Azimut Group, joining us there in our Dubai studio. Thanks so much, Nicolo. And Elon Musk says he plans to slash $1 trillion in government spending by the end of May. The billionaire running President Trump's so-called Department of Government Efficiency told Fox News he's confident the savings won't affect critical government services. The Doge website so far lists about $22 billion in contract savings, while claiming $130 billion in unspecified cost reductions.
They may characterize it as shooting from the hip, but it is anything but that. Which is not to say that we don't make mistakes. If we were to approach this with the standard of making no mistakes at all, that would be like saying someone in baseball's got to bat 1,000. That's impossible. So when we do make mistakes, we correct them quickly, and we move on.
Now, President Trump says he will withdraw his nomination of Republican Congresswoman Elise Stefanik to serve as the U.S. ambassador to the United Nations. The move will preserve a consistently loyal Trump vote in the House of Representatives, where the GOP already holds only a slim majority. The decision is an implicit acknowledgement of the difficulties Republicans face in passing their legislative agenda on taxes, energy, and immigration this year. Also, U.S. Secretary of State Marco Rubio says the Trump administration has so far revoked over 300 visas as it pushes to expel foreign citizens who protested against Israel. Among them are several international students who expressed support for Palestine. Their lawyers say the actions violate constitutional rights to free speech and due process.
Maybe more. Might be more than 300 at this point. We do it every day. Every time I find one of these lunatics, I take away their visa.
You're saying it could be more than 300
sure,
visas?
I hope. At some point, I hope we run out because we've gotten rid of all of them. But we're looking every day.
Coming up, Lebanon picks its new central bank governor. More details on Karim Souaid's appointment next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Hong Kong today. Lebanon has named Karim Souaid as its new central bank governor. Souaid is the founder of Dubai-based private equity firm Growthgate Partners, and previously worked at HSBC. But Lebanon's Prime Minister Nawaf Salam says he had reservations about the appointment. Bloomberg's UAE bureau chief Dana Khreish joins us now. Dana, well, this is a big moment for Lebanon. Since the formation of the new government, the next step was going to be the appointment of the Lebanese central bank governor. And for those of us following Lebanon very closely, there was a big debate going on internally about who would end up taking this position, because it was going to be key to perhaps unlocking some reforms in the banking sector. What does the appointment of Karim Souaid tell us about what this government's priorities are going to be and what they're going to look like vis-a-vis the banks?
Yes, good morning. This is a very critical appointment, maybe the most critical for Lebanon's outlook financially and in terms of an economic recovery. And it is, if you think about it, the first time they have named someone else other than Riyad Salameh, who's been at the helm of the central bank since 1993, and that position had been vacant for a year and a half ever since his 6-year term ended. So this was very critical to see how Lebanon wants to show the world, and especially international lenders and donors, how it wants to go ahead and move forward with an economic recovery. Now, as you said, the Prime Minister did have some reservations because there were a lot of reports citing what was said to be his own plan about how to plug in, the deficit in the financial sector. And that's a huge deficit. It's almost $80 billion if you count in the Eurobonds that Lebanon defaulted on and that the central bank holds as well. So his point was that, the banks shouldn't cough up any billions of dollars to cover these deposits, to cover the deficit, but that it should be solely the responsibility of the government. Now, we know that the banks and, subsequent governments in the past have come head to head with regards to this issue, and there's still conflict. And the concern is that if there's still disagreement between bankers, central bank, and some officials or some government officials with regards to this particular fiscal deficit in the financial sector, then it may further delay an economic recovery, and Lebanon might not get that IMF loan program.
Well, this is what I was going to ask you next, Dana. Lebanon has been attempting to push forward negotiations with the IMF for the last 5 years, and IMF have said they want to see a fair distribution of losses in the banking system. Does the appointment of Karim Souaid, to our knowledge, is it going to help or hinder the progress of those negotiations?
It depends on how he wants to move forward with the restructuring of the banks. So when Lebanon signed a staff-level agreement with the IMF back in 2022, the main conditions from the IMF was a banking secrecy law, restructuring the banking system, meaning a bank-by-bank audit assessment of the losses at the banks. Now, this has to happen to better understand the financial deficit there, and this is what the IMF is demanding. And we also heard the Prime Minister yesterday also saying that Despite the fact that Parliament approved a bank secrecy law, there must be some amendments to that to appease the IMF and what it wants. So now Lebanon wants to sign or start negotiations on a new IMF program. But there are experts who say that the IMF is not going to budge on certain conditions, including bank-by-bank assessment, a banking secrecy law, and a restructuring of the entire financial system that includes about 45 Lebanese banks.
Yeah, 45 banks for a tiny country like Lebanon. I mean, therein lies somewhat of the problem. Bloomberg's UAE Bureau Chief, Dana Khrish, thank you so much. Later on, we'll pick up the conversation with Kim Ghattas as well. Now, suspected U.S. airstrikes on Friday have hit sites across Yemen controlled by the Houthi rebels, including neighborhoods in the capital, Sana'a. The Associated Press says the strikes appeared more intense than earlier in the campaign that began on March 15. An AP video shows one bomb dropping into Sana'a, where many people were awake before dawn for Ramadan. The U.S. Central Command has not immediately acknowledged conducting any strikes. And coming up, the U.S. seeks to control Ukrainian investments. We look at how this would impact Ukraine's economy. Coming up next, this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, Bloomberg has learned that the U.S. is pushing to control all major future infrastructure and mineral investments in Ukraine. A draft document grants the U.S. first claim on profits transferred into a special reconstruction investment fund and requires Kyiv to pay for all U.S. military and economic support since the start of the war. For more on this, we're joined by Bloomberg's Tony Halpin, who leads our Russia economy and government coverage and also was one of the editors on this fascinating story. Tony, talk about the impact this deal could potentially have on Ukraine and Ukraine's economy.
Yes, it's potentially very far-reaching, Jennifer. And if you think the main point of, from the U.S. perspective is that they're seeking a right of first offer on all investment projects related to future infrastructure and natural resources development. And the fund itself would be controlled by the US, it would have a majority of seats on the board, and it would have a golden share that would block Ukraine from taking certain decisions. So effectively, Ukraine would have to offer up to the US pretty much every investment project that it wanted to pursue after the war in reconstruction, and the US could decide whether to take or leave those projects, and it would have first call on pretty much all of the profits from those projects that were placed into the fund. Until, as you say, the US considers that it had been repaid fully for support from Ukraine to Ukraine for the war effort. So it's a pretty extensive and practically unprecedented US presence in a European country's economy.
Right. And Tony, what do you make of you and the team assessing this document while at the same time we're seeing European officials rejecting easing sanctions on Russia, potentially affecting this whole entire war and how it moves forward? What do you make of sort of the counter of these two sides?
Yes, well, of course, Ukraine is seeking EU membership, and this investment plan could well complicate its path towards entry into the bloc. And at the same time, the EU is saying it doesn't think that this is the time to ease sanctions upon Russia, just at the moment when the Kremlin is pushing the Trump administration to allow an easing of sanctions on some of its banks, and in particular reconnecting them to the SWIFT international payment system. Now, that payment system is a European system. It's not in the gift of the Trump administration to lift sanctions on SWIFT. And so that potentially sets up a clash between the White House and Brussels over how to approach the issue of sanctions toward Russia.
Did we get any more insight, Tony, about potential European plans for sending troops to Ukraine when they met yesterday?
Yeah, it's not a great deal, to be honest. The Assembly of European Leaders was to discuss a coalition of the willing, which increasingly seems like a coalition of the unwilling. Only Britain and France have said already that they're ready to send troops to Ukraine. But they came away from this meeting without much agreement, really, on what shape a reassurance force, as they put it, would look like, who would participate, and what this force would do. And as you remember, Russia is very hostile to the positioning of any European troops on Ukrainian soil. So this is very much an unresolved issue as far as Europe's concerned.
Yeah, fascinating times there. Bloomberg's Tony Halpin joining us. Thanks so much, Tony, for your reporting and for joining us. Appreciate it. Let's take a quick check at where your markets are positioned ahead of the trading day. If we take a look at U.S. equity futures, they are marginally higher, at least S&P futures. A bit unchanged, though, mixed as it stands. It seems investors are still trying to assess what the potential impact is from Trump's tariffs, especially as we move closer to April 2nd, the potential Liberation Day, as President Trump would call it. Eurostock 50 futures, though, pointing down about 0.3%. All right, coming up, Lebanon names an ex-HSBC banker as the new central bank governor. We'll speak to Kim Ghattas next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Stocks sliding and gold at a record as fear ramps up ahead of President Trump's reciprocal tariffs next week. The trade war also stoking inflation fears as we await the Fed's preferred price gauge. Lebanon picks a former HSBC managing director as its new central bank governor to lead a policy overhaul and kickstart an economic recovery. Plus, a Bloomberg scoop, a draft document reveals the U.S. seeking to control investment deals in Ukraine, squeezing out European allies. It's just gone past 7:30 a.m. in South Africa. I'm Jennifer Zapasaja in Johannesburg.
And I'm Jumana Versace in Hong Kong for the last day this week, where it's just gone 1:30 p.m. Welcome to Horizons Middle East and Africa. It's been quite a volatile week for stock markets, Jen. And unfortunately, we're still talking about tariffs. And it feels like we're going to be talking about tariffs all of this year.
Yeah, and it's going to be interesting to see really how next week shapes up, Jumana. We've been talking about April 2nd for so long. And so the question is, what do tariffs actually look like? Do we get more clarity? And potentially, how much more does President Trump actually promise to pile on, as he's alluded to over the past few weeks? So let's just take a look, though, at where markets are positioned ahead of the trading day. As we mentioned, of course, Thursday, a lot of the tariff angst really kick-started into high gear, considering the auto news that we did get from President Trump. But if we take a look at U.S. equity futures, NASDAQ futures marginally down right now, about 0.1%. We are, as we were just talking about, we're assessing the latest tariff news from President Trump. On Thursday, we saw a number of automakers declining, not just in the U.S., but also globally. And that even declining the negativity that we did see on Thursday, even offsetting data that did show faster than anticipated growth for the fourth quarter in the U.S. Now the focus, of course, turns to the Fed's preferred inflation gauge later today. That is PCE. The NASDAQ, though, is on track for back-to-back weekly gains. So we'll wait to see how this potential tariff angst shapes up. The U.S. 10-year yield at 4.34% there. We're seeing yields actually backing off ever so slightly there. But, of course, there is still concern about the growth trajectory for the U.S. So that is one to watch. Gold hitting another record, up about just over 0.6% there to trade at about $3,076 an ounce there. And a lot of safe havens, a lot of investors, are pouring into safe havens, so much so that Goldman Sachs has even raised their year-end forecast for bullion. And finally, Brent crude down just about 0.2%. Oil heading for its third weekly advance, though, but Brent crude at about $73.85 a barrel there. And a quick check at our terminal chart for today. We mentioned, of course, the PCE data print that we're going to get later today. I mentioned that we did get a data print on Thursday showing that the fourth quarter for the U.S., we did see the economy pick up. But today, the focus will be on PCE, and the expectation is for the print to show that PCE remained at 2.5%, mainly driven by services. But the question will be, will investors be focused on this data print or just look past it to really what they expect could be ahead as tariff angst continues to pile on? Let's check in, though, on how markets in Asia are faring. Avril Hong is standing by in our Hong Kong studio. Avril, what are you watching?
Well, Jen, it's that tariff angst that you speak of, right? So even though the region's stock benchmark is headed for gains in the quarter, it is seeing its worst declines in about a month, risk off, as we continue weighing out the risks from reciprocal as well as auto levies. But when you look at the FX picture, it is a bit more nuanced, because you look at this Asia dollar index as a gauge of currencies in the region, which excludes the Japanese yen, only ticking a bit lower, which suggests a more muted response in the FX complex, which in turn tells us that some traders actually see potentially the spillover effects from auto tariffs as a bit more manageable. That being said, we are seeing tariffs kind of hitting sentiment among the big losers today in FX. Taiwan dollar, maybe a bit of the exacerbation given the stock market declines today, so influencing some of the outflows. The outlier today is the Japanese yen relative outperformance, so not by much. Dollar yen still not far from the 151 level. Of course, we got data today which showed us Tokyo inflation accelerating more than expected, higher than expected, pickup in cost of living, so really solidifying here the BOJ's rate hike path, despite the concerns about what these auto levies are going to mean for the Japanese economy.
Avril, thank you so much. That was Avril Hong here in Hong Kong. Now, Lebanon selected Karim Souaid as central bank governor, picking a private sector finance specialist to lead a long-delayed overhaul of the financial sector and kickstart an economic recovery. This comes as the Israel Defense Forces, the IDF, struck and eliminated a battalion commander in Hezbollah's Radwan force in southern Lebanon. So joining us right now is Kim Ghattas, author of Black Wave, Saudi Arabia, Iran, and the 40-year rivalry that unraveled culture, religion, and collective memory in the Middle East. Kim, it's great to have you with us. We can talk a lot more broadly about the region, but first I just want to start with Lebanon. This was a moment that many had been awaiting, the appointment of the new central bank governor. And for those perhaps not following as closely, this was going to be a key moment because his job primarily is going to be a reform of the banking system. What does it tell us that the person who ended up being appointed actually has the banking, the support of some of the key chief names in the banking system? And what does it tell us about the distribution of losses and whether these shareholders will actually participate in the reform?
So it has been a great disappointment, I think, for a lot of Lebanese to see that we could be going back to business as usual when it comes to Lebanon's economy. There were great hopes that President Joseph Aoun and the reformist Prime Minister Nawaf Salam would push for a governor of the central bank who would really be more who would be seen to be going into this job with being more equitable in how he sees what needs to be done and is not on the side of the banking sector, which insists that it is not up to them to pay for the losses that were, devastating for Lebanon's economy and Lebanon's depositors after Lebanon's economic crash in 2019. A reminder, one of the worst top 3 economic crashes in the last 150 years. There were other candidates who would have been more welcomed, and I think it is disappointing for a lot of Lebanese to see that President Aoun himself, appeared to be on board for this candidate, and I think that dents his image as a reformer. Now, Prime Minister Salam has said the governor still needs to abide by the agenda, by the Cabinet of Ministers reformist agenda. I'm happy to keep an open mind, but I think that there's a lot of disappointment in Lebanon today, and the proof is really going to be in the pudding. But there is a reason why the international community is also watching this very, very closely. It isn't just about reform in Lebanon. It isn't just about IMF plans. It isn't just about who is going to pay for this economic crash. It is also about making sure that Lebanon re-enters properly the international banking system. There's a whole parallel cash economy. And of course, the focus will be on illicit financing and the finances of Hezbollah.
Yeah, I mean, his work has got cut out for him. You mentioned a little bit the rift, perhaps, between the new President Aoun and the Prime Minister, Nawaf Salam. But then also the fact that...
And we need to point out that Nawaf Salam did not support the candidacy and did not vote for him.
Yeah, so there's a bit of a rift there.
Yeah.
But when this new administration was put in place, there were lots of hopes that it was going to be reform-minded. And yet, at the end of the day, the appointment of this new central bank governor came at the request and with a big push by the banking community. So they still somewhat seem to appear to have a lot of sway over political decisions.
They most certainly do have a lot of sway. The banking sector does not want to pay for their own mistakes. They want the state and the depositors to pay for those mistakes. And it just shows you that Lebanon has a multi-layered problem. It isn't just about Hezbollah, for example, and its stranglehold on the economy, which is what everybody was focused on over the last few years, and particularly over the last year in the wake of the Israeli war against Hezbollah in Lebanon, which decapitated and pretty much decimated Hezbollah. Hezbollah was part of a larger problem. They benefited from and they protected the vested interests of the political establishment in the country. The political establishment, which has been in power for the last, since the end of the Civil War, some of whom participated in the Civil War, and they are also keen on maintaining the grip on power and on the economy. So the euphoria that comes after a big change, and it was an incredible turnaround for Lebanon to have somebody like Joseph Aoun elected and Prime Minister Salam chosen, shows that it is a continuously tough battle, whether it's in Lebanon after the election of Joseph Aoun, or whether it's in Syria with the removal of Bashar al-Assad. That is not the end point. That is the beginning of the hard work.
Yeah, most definitely. Let me ask you about the security situation as well. The Israeli defense minister has said unless there is stability in Galilee and Kiryat Shmona, Beirut may be at risk. There's still an exchange of rocket fire taking place despite the ceasefire. Are you worried that this could eventually lead to another collapse in the ceasefire and a restart of the war?
We have to remain vigilant and worried. I remain cautiously optimistic, but I'm an optimist who worries a lot. There are many ways in which this could go into full-blown escalation again. We've heard these threats from Israeli officials in the past before. Ever since October 7th, there were talk about sending Beirut back to the Stone Ages, and then eventually after a year, Beirut was also targeted. It is up to the president, Joseph Aoun, to make sure that the Lebanese army deploys as it is meant to do in the south and takes over territory and establishes control, that Hezbollah is no longer able to operate. We had several rockets launched at northern Israel just last week. It is also up to the Israelis to live up to their end of the bargain of a ceasefire that requires them to withdraw to the international border, some of which is disputed, but there's still a border.
So the Trump administration has been keeping their hands busy with a whole range of topics, but at some point the Iran portfolio is going to come up again because President Trump referenced it many times in the campaign. He's talked about maximum pressure campaign on Iran. What do you think that's going to look like, given that is an area of your expertise? What are we likely to see out of the Trump administration in terms of the pressure they're going to be applying to Iran later this year?
So it's worth pointing out that the Iranian axis, as it's known, is at its weakest, that Iran itself is at its weakest since 1979-81, the Islamic Republic of Iran. And the Iranian axis, with its proxy militias, with its allies in Syria, is pretty much on the back foot, if not, down, but not out. So that is a particular moment of opportunity for the Trump administration to exert this maximum pressure. But maximum pressure without an end goal, without a diplomatic outcome, is useless. It's just maximum pressure forever. And at the same time, you have a very ascendant Israel in the region that is pushing militarily into Lebanon, into Syria, that would likely want to have military strikes against the nuclear program of Iran. And I have to say, some of the messaging coming from the Trump administration has been a bit conflicted. You have Steve Witkoff, the special envoy, saying, we want a deal, we want to do it quickly, we're not going to spend months negotiating this. So you have the danger of a quick deal that is not a strong deal. And you have the National Security Advisor Mike Waltz saying things like full dismantlement of the Iranian nuclear program. And I listened to his interview of last Sunday several times to decipher what he meant exactly, if it was just full dismantlement of anything that could approach nuclear grades enrichment, but full verification of the rest, or if he meant just full dismantlement, and that takes us into a whole different ball game.
Yeah, definitely something we're going to be watching out for. Kim, really good to chat to you over here in Hong Kong, of all places. We come from the same village in Lebanon, but we met in Hong Kong. Kim Ghattas, author of Black Wave. Thank you. Well, coming up, are plunging solar panel prices opening up opportunities for investment in Africa? We speak to the CEO of Ignite Energy Access. That's next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Well, plunging solar panel prices and international funding are now spurring the rollout of so-called mini-grids that can transform rural communities. This comes as the World Bank launched a program to get power to 300 million Africans by 2030, a project that could attract $85 billion or more of investment. Joining me now from Abu Dhabi is Yariv Cohen, co-founder and CEO of Ignite Energy Access. Yariv, great to get you on the show. Thanks so much for joining us. So let's just start here. You actually call the off-grid industry in Africa potentially is at an inflection point. Talk about what you mean by that.
Thank you. Good morning. Well, Africa has abundance of sun. We know that and we see it. Today, with the cost of solar panels and batteries, we can essentially put a solar panel and a battery on every home. So we can connect 300, 600 million people into power in no time at all. We don't need to build cables. We don't need to have trucks to move diesel around. We just need to put it on their house and build it. And now it's affordable. With the support of the World Bank, we can make it all happen by 2030.
What does the support of the World Bank, though, mean at this point in time? And I say that especially considering that the U.S. Is the biggest shareholder within the World Bank, and we've seen the U.S. That try to at least push back in terms of funding. What does the World Bank at this point have to do with this electrification push?
So the first thing is where they're mobilizing governments. As we saw that in Dar es Salaam just 2 months ago, mobilizing governments to sign the compact agreement and increase their ambition. Second, they're using de-risking tools to work with the local governments and with other DFIs to make a push and make it happen. At the end of the day, off-grid solar is the most cost-effective way to connect people to power. It's not a big dam, it's not a big power plant. So what we expect is that will continue, especially in a world where we are capital constraints.
What does the U.S., though, pushing back and dialing back development aid mean for this push?
So I think everybody is universally aligned on connecting people to power. The most efficient way to make it happen today is by solar energy. It's cheaper than everything else around. So it doesn't matter if you build power plants, or if you build big solar plants, the off-grid is the way to go.
So you're not concerned then at all about the U.S. and what Trump has said in terms of development aid?
So we've been working very well with the U.S., well, actually with all European government, the U.S., Asian countries, to make it happen. Because this is such a big consensus that people need to have power. They need power to have a light in their home. They need power to access the internet. They need power to access the AI. So we're creating a new set of consumers, 600 million consumer. Our goal in Ignite Power is to connect 100 million more people to power and to internet, adding them to the world economy.
Yariv, what is the role of African governments then in this push?
So energy is universal. It's needed. We need to have enabling regulation. We need to have support from the government. We need them to want it. We need to mobilize governmental institutions, whether they're central banks or local banks, to work together with utilities, to work together with the post office and mobile money and telcos. So African governments are enabling it and coordinating it.
Where is there still room for improvement, though, Yariv? How does this get an additional push to get these goals achieved?
In one word, ambition. In the Millennium Development Goals was to reach universal energy access by 2020. We are now 5 years late, and we will be by 2030, 5 years more late. So what I like to see in the World Bank is an ambition. We want to connect 300 million people. Ignite Power, we want to connect 100 million people. In each one of the countries we operate in, set ambitious targets, and they do. We can make it happen. The technology is there, the capital there, the operational manual in there. We know what regulations we need. So if you ask me what we need, is we need to be even more ambitious. Why only 300?
Are you seeing the enabling legislation, though, on the continent that you want to see? Where is there more room for improvement?
So it's improving everywhere. It's improving with VAT waivers for solar energy. It's improving in defining minimum standards of what is needed. Governments understand more and more that the way to go is distributed, and it's solar, and it's clean, and it's digital, and are creating the whole environment around it. It's a process. Every year, the enabling environment becomes better in every country we operate in.
Wow, that is optimistic there. Yariv Cohen, co-founder and CEO of Ignite Energy Access, joining us there from Abu Dhabi. Thanks so much, Yariv.
Well, let's turn to Sudan now, where the army has recaptured the national capital of Khartoum from the Rapid Support Forces militia in a major blow for the RSF. It marks a turning point in the 2-year civil war that's drawn in outside powers and torn apart the resource-rich North African country. Monitoring these developments, Secretary of State Marco Rubio has said the U.S. is engaged with partners in East Africa.
We're engaged. I've had conversations with a number of countries over Ethiopia, with Kenya, just over the last 72 hours, so we've been raising that. And we're very concerned that we're going to backslide to where we were a decade or less ago.
For more, Bloomberg's Ondiro Ganga joins us now from Kigali, Rwanda. Ondiro, what do you make of these comments by the Secretary of State, Marco Rubio, and the fact that the U.S. administration is paying close attention now to the developments in Sudan?
Jumana, it just means that the dire situation in the country is beginning to make global headlines and getting the attention that it deserves. If you look at what is going on in Sudan, it has been 2 years of fighting. There's a humanitarian crisis ongoing. 150,000 people have lost their lives, 12 million uprooted from their home, and 48 million people in dire need of food and face the risk of hunger. So that is why we are seeing the U.S. beginning to pay attention to this. And this fighting is nowhere near over. You also look at the neighbor, Sudan. They are also having their own internal humanitarian crisis, and they're also at a very high risk of war. So the U.S. does not necessarily want a twin crisis. You also have the Secretary of State who spoke to Ethiopia's Prime Minister Abiy Ahmed, and still the conversation centered around stability in the Horn of Africa region. Ethiopia has its own internal conflict risk in the Tigray region, also conflict brewing with Eritrea. And you look at countries like Kenya, they have their own political volatility, and the presence of al-Shabaab is growing in Somalia. So this is one of the reasons why the U.S. is beginning to pay attention again. And it's not the first time they're doing this. Previously under Joe Biden, we saw Secretary Antony Blinken try to broker a peace deal between these two sides. But he later on expressed disappointment, saying that both sides are committing atrocities and wanted to win this war at any cost. So this is some of the reasons why we are seeing the U.S. beginning to pay attention, because currently Sudan is only getting 1,000 times less than what other places where humanitarian crises are going on are getting. So there's need to tame it before it becomes irreversible.
Yeah, and let's turn to the recent developments on the ground, because the Sudanese army has announced that they've now taken full control of the city. How significant a development is that?
Jumana, it's very significant because then it gives them the morale to keep pushing and try and reclaim more territory from RSF. The army has said that they're not going to rest. They want to liberate the whole country from the rule of the militia. On the other hand, you have RSF who are licking their wounds, but they're not taking it lightly. They might have lost the battle, but they're really fixated on the war. They say that they are repositioning themselves in Omdurman and they're going to strike back. So the fighting is nowhere near over. And we are seeing also proxies begin to come in. Ever since it was announced that the army had recaptured Khartoum, we've seen a Saudi delegation go and say they're willing to help them build back. And while they're fighting internally, there are also external forces that are giving them money, that are giving them weapons. So we are likely to see this continuing for a long time, and it's because some of these powers also have their own vested interests. Sudan has rich agricultural potential, gold and energy, and these are resources that they look to tap into, not forgetting access to the Red Sea to set their naval bases.
Bloomberg's Andira Ganga in Kigali, Rwanda. Thank you so much.
Other stories we're following in the region. Nigeria's state oil company is preparing for its long-delayed IPO. The Nigerian National Petroleum did not give a timeline for the listing, but said they're in the final stage of obtaining a listing. The first NNPC share sale was proposed nearly a decade ago. Also, Zambia's economy grew more than expected last year, beating government and IMF estimates. GDP expanded by 4% compared to 5.4% in 2023 after a surge in the fourth quarter output. The IMF had cut Zambia's growth forecast from 2.3 to 1.2% last year. And for more stories like this from the continent, be sure to subscribe to the next Africa newsletter, on the terminal and our website, and our podcast available on Apple, Spotify, and wherever you usually get your podcasts. And don't forget to tune into the next episode of our monthly show. That's on March 28th, which is today.
To that. Well, this caps the end of, my week in Hong Kong, but also the end of our 2-hour show because as of next week, we're going back to daylight savings time hours. So we're going to be a 1-hour show and also a special day for us because it's also Jen's birthday. So let's round up the week, not looking at markets, but wishing our very own Jennifer Zabazaja a very, very happy birthday. I hope you're doing something fun this weekend, Jen, and not thinking about the tariffs.
I'm trying. I can't. I'm not going to. I'll take a break. I'll take a slight break, Jumana. It's been great to be with you and have a safe trip back.
That's it for Horizons Middle East and Africa. Thanks for tuning in. See you next week.